in talk radio. Your host, Joe Cristiano.
Welcome, everyone, to Liberty Talk Radio. I'm your host, Joe Cristiano, and welcome to Liberty Talk Radio. This broadcast is being brought to you live from the good old USA to around the world. Folks, today we're going to have Andy Sutton. He's an economist from the Commonwealth of Pennsylvania. He actually is almost I guess you consider him a dropout. He left the financial investment community, which he had his own company at one time, because he is now devoting himself to educating people on the corruption of our financial and investment community, and what is going on with our government, our currency, and in finances is so atypical of what should be going on. So much is so corrupt that he could no longer give financial advice. How do you give financial advice to a system that's rigged, of which you are not part of that system? So he went to a different occupation, but he's still a fabulous economist. He's my favorite, I'll be honest with you. I mean, he's clear and concise. He's a fabulous writer. He writes a blog called My 2 Cents. And you can get that if you go to his website, Sutton, SUTTON-associates.net. And there's on the sidebar, you'll see a place for his blog, My 2 Cents, or you can just Google My 2 Cents and it'll pop up. And he's a prolific writer. He's absolutely terrific. He's very succinct, and you can tell he's not very happy. He calls the Fed the not so much U.S. Fed or something like that, and because it really isn't representing us, it's representing the banking cartel. And I know that sounds conspiratorial and wacko-nish and, stuff like that, where people say, oh, he's one of those way out guys that, that conspiracy theories. No, this is not a conspiracy theory. As we all know, I should say, as very few of us know, the Fed was established by the big money managers of the world at Jekyll Island back in 1913. And without consent of Congress. In fact, it was voted on the eve of Christmas Eve. It was like 3 o'clock in the morning when there was just a minimal number of people in Congress, and those that were there were those that were in agreement with the Federal Reserve for whatever reason that may be, and it was voted on then. Now, when you change your entire monetary system, the entire monetary system, which affects not only the United States, but the entire world, and you vote on it on the eve of Christmas Eve, knowing that most people will not even be there, and only a select few are encouraged to be there for whatever nefarious reasons there are for that, and it's voted on, and that becomes the law of the land. We have a system of government that is not working for the people. It is working for the banking industry. And ever since then, we have had nothing but financial crashes. We've had booms. We've had inflation. In fact, the dollar is worth, I think, less than 4 cents than the value of it when the Federal Reserve was first established. Now, that should tell you something. Now, of course, it's a very, very slow and nefarious process, this inflation. It doesn't happen all at once like Zimbabwe, where they start printing $100 trillion bills. But it's so slow that the Fed, for example, now is concerned that we don't have at least 2% inflation. And the Fed relates inflation with a growing economy, and that's wrong. And the reason why people don't realize that is because people grew up going to government schools that never taught that. The government schools teach you what they want you to know so that when policies come out, they seem to make sense. But if you break away from the system, you break away from the matrix, and you start, studying on your own, you'll find that so much of what is said is absolute nonsense. It doesn't make any sense. It's not constitutional, and so much is not even legal. So we have the Fed saying that we just want 2% inflation. That would be good. Well, I have to ask the question, why 2%? Why not 1.8%? Why not 2.5%? Why not, if 2 is good, wouldn't 4 be twice as good? I mean, it doesn't make any sense. Well, they want inflation because the government has to inflate the money supply, has to make money cheaper because the debt continues to grow. I went to a conference in, not a conference, I should say, to a speech given by Michael Tanner. He's a senior fellow at the Cato Institute, and his specialty is the national debt. This is what he talks about. And he just wrote a book, Going Broke, or Going for Broke, I think it's called. I should have the book here so I can show it to you. It's fascinating. But he gave a speech. In fact, I listened to him twice, both at a luncheon and a dinner. And there were a lot of interaction by the audience, a very smart audience, And as I looked around the audience, I'm going to steer away a little bit, but from my original conversation. But I looked around and I said, the wrong people are here. The people who are here probably already know this stuff already. They seem to be, they were an older group, seemed to be pretty well established. They dressed very well. In fact, I felt like the poor man in the group. And I said, these people probably are well aware of all of this. This is the information that needs to get out to the rest of the world. So let me be this person that sends it out to the rest of the world. I'll help Michael Tanner. In fact, I've asked him to be on our show, and I'm sure he'll be on our show within the next few weeks. But he shows the national debt, the current year's national debt, the deficit rather, not the debt, but the deficit actually shrinking slightly in the next couple of years, and then it starts to rise again. And that's, I won't get into all that, but it's relatively insignificant. This year, our deficit, that means how much money we were short that we needed, will only be a little over $450 billion. Now that's a phenomenal sum. But when you compare it to the past few years where we have been over $1 trillion a year, which was totally unsustainable, even at a short term, all right, it actually looks good. But after this couple of years, it starts rising again to 700 billion, and then back to $1 trillion again. And within the next 20 years, the deficit would consume the entire revenue of the government. Now, where is this money going to? Well, this money is going to all government programs. Primarily now, believe it, primarily it's going to Medicare, Medicaid, and Social Security. Those are the three big ones. But then added to that, we have the war is here. We have the war on, we have the war on terror, the war on drugs, the war, all these other things. And when you add all that up, the rest of the budget is very small. And although, in my opinion, we shouldn't have any of these programs, we could easily, very, very easily be able to finance all of the other programs like highway fund and whatever, things of the infrastructure funds, very, very easily. Cash basis, no problem, no borrowing, nothing. The dollar would be strong. We could still be on the gold. We can be on the gold standard and have no problem. But it is unsustainable, and we will go broke. Unfortunately, this will never change because, as in Greece, and we are Greece, by the way, as in Greece, trying to initiate what they call austerity programs. In other words, programs which will allow the government to pay for its debts, be responsible. They call it austerity programs, which is good, not bad. People will have to give up big pensions and medical assistance and all the other public assistance. Well, they don't do it. They riot in the streets, and that's exactly what will happen here. The politicians won't do it because they won't get reelected to office. So I think this will be sustained, and we will see an eventual devaluation of our currency. So if you have money, always have money on you. Always have cash, dollars, quarters, nickels, dimes, or whatever. Always have money on you in case something happens and you need to get to money quickly, but it's not a good long-term investment. I think we do have right now Andy Sutton on the line. Andy, are you there?
Hey, Joe, how are you?
Okay, well, I sort of filled in for you in the first part of the program.
Yeah, sorry about that. We seem to keep getting our wires crossed.
Well, were we to start at 7:30?
No. This was the day I could have gone at the normal time. It's okay. We're all here.
Oh. Oh, wow. Oh, because the last email I had was 7:30. Okay. Well, I got up a half hour earlier.
Hey, so did I.
You owe me half hour sleep.
Okay. All right. Plus interest.
No problem. Well, anyway, we're only 10 minutes into the hour, and I just sort of warmed up the audience to basically talk about, our economic condition and our budget. I told them that I was. Aaron and I drove up to Wichita, Kansas, and listened to Michael Tanner, the senior fellow from the Cato Institute, on the budget and the debt. And fascinating subject. Anyway, it was very, very good. So it was a good lead-in. Anyway, I was just talking about that. So I'll leave the rest up to you. Why don't you just take off and do what you want to do?
Well, there's a whole bunch of. All of it comes back to the debt.
Right.
That was the perfect lead-in. I was just sitting here over the weekend going through different news sources and whatnot and picking out articles, and the next thing I knew, I had about 24 tabs open on my browser, and my computer was ready to choke me. So I figured I'd pick the best 6, and we try and go through there. But I'll start out with the first one that I had. There was a survey that was done not too long ago. And 7 out of 10 Americans, you're going to get a kick out of this, believe that debt is a necessity in their lives. So this kind of ties right into what you were saying through the Cato Institute.
I don't understand that. Why would they think that's always been? You go back into biblical times, even before that, and you'll find that debt was a curse. It was it was the Antichrist, if you will. Where did they ever come up with that?
Well, here's the thing. This was a Pew survey. And sometimes you have to be very wary of statistics and surveys and such, because you can get whatever answer you want depending on who you talk to. But I actually believe this one. It says approximately 7 out of every 10 Americans believe that debt is, quote, a necessity in their lives, and approximately 8 out of every 10 Americans actually have debt right now. Most of us like to think that someday we will get out of the hole and quit being debt slaves, but very few actually ever accomplish this. And then it just goes on, and then there's an opinion there about how the system is designed to trap people. And I would actually take that a step further and opine that they go after the young people. This is a whole, and I've seen this happen time and time again, where they go to these college campuses, they set up, the freshmen come in. Oh, you get a set of shot glasses. If you sign up for one of our credit cards or apply for a credit card, or you get a stuffed mascot of whatever school you happen to be going to. They should hand out stuffed turkeys, but that's just
at least they can eat.
Yeah. And what they do is they get these kids in young, and the student loan, that's a whole other thing. They get them inculcated to this idea of owing and always being in debt to somebody, because then when you get out, now you have $40,000, $50,000, $60,000 in debt, and your car is junk because you've been driving it for the last 4 years. Well, then I need a new car. So they go and they get more debt, and it just continues on and on and on and on. And what they've been trained to do now, even with mortgages, is you get a mortgage, all right, and you start paying on this, and a mortgage is a ripoff. You end up paying for your house 2 or 3 times over.
Correct.
So you pay for 4 or 5 years, and then they start offering you equity loans, because now you've built up like this much equity,
right,
and they're willing to lend you money on the equity that you've built up. Right. So it gets even bigger, and this is what people do, and they just, because they're used to it, and they get started at a young age, and they go right down their line, and they have no problem with it. So this survey here, I actually have no problem at all believing that that's actually true. I was surprised that it was only 8 out of 10 Americans have debt. I thought it would have been higher, honestly.
Well, debt is servitude, and when I was growing up, you avoided debt like the plague. And I gave this example when we had this discussion the other day in Wichita. I said, when I was young and good looking and had a sports, my little hot rod car and the whole bit. I mean, I owned it. I mean, I didn't owe any money on it. And when I went to the gas station to fill it up, and usually I put 1 or 2 gallons of gas in for 25 cents, I paid cash. So when I drove away in a car that I owned, and the gasoline in the car I paid for. In other words, there was no debt when I got out of the service station. And today, in fact, I just saw an ad the other day. I think it was an Audi or something like that. It's a pretty expensive car. It said, need a new car? Don't have the cash? No problem. Buy it today, no payments till next year. So people are buying cars that they can't afford. They're not paying for it right now, but they're going to pay through the nose later. They go to a service station. They put the gas on a credit card. They're indebted now to Visa, MasterCard, or whomever, to the credit card company for the gasoline. They drive away, and they own nothing. But driving away, they are further in debt. It's the exact opposite of the way it was when I was young. And I seem to have survived a lot of financial downturns and whatever. I'm some real big business downturns as well. But my wife and I were able to survive because we never had any debt. We just turned everything off, didn't have any expenses, and we basically, didn't do anything until we picked ourselves up and we started over again. And it worked out the end result, it worked out extremely well. Today, people can't do that because when they falter, they're over. It's over. I mean, everyone owns them. They can't get back up again.
Yeah. Here's a couple more kind of statistics here that kind of play into that. The average U.S. household today that has at least one credit card, the balance that they're carrying as a household just on credit cards is about $16,000.
Oh my God.
Well, and you look at what the rates on some of those cards are. Even at 10%, that's $1,600 a year. It's more than $100 a month just in interest.
Right.
And 10% is cheap.
Yeah.
Most of them are double that. So it is just unreal. You've got 40 million Americans paying student loans. And those, you look at the size of the workforce, that 40 million right there, that's a quarter of the workforce is still paying off student loans.
Right.
I mean, it is just unreal. And obviously then you get into the other stuff like the auto loans, the mortgages, and all that kind of stuff. Like I said, I was surprised that only 8 out of 10 had some kind of debt. I figured we were like 9.5 out of 10, or something like that. But yeah, it is a huge, and you know what? It starts at the individual and it goes right up through the local government, the county government, the township, whatever, the state government, federal government, global. Everybody's in debt. What I want to know, and I already know, but the rhetorical question to pose to people: if nations, if states, counties, everybody owes, who do they owe it to? Who is that money owed to?
Yeah.
Somebody's on the other side of that, right?
Right.
Yeah. Those are the the lords and so forth of the medieval times.
That's a good analogy.
They're the ones that are sitting there every month. Gimme. I mean, you think about that. If countries owe trillions of dollars, who do they owe it to? They owe it to banks. whether it's the European Central Bank, as in the case of Greece, the IMF, the World Bank, Goldman Sachs, Bank of America. They shouldn't call that Bank of America. That should be a felony.
It was interesting. Last year, my wife and I, we were at this county fair type thing, this big thing in Tulsa, and they have in the conference center, they had people selling things and whatever, and we needed a new mattress, and there was a mattress company there. My wife always wanted to buy this type of mattress, so we bought it. And the guy says, "Well, would you like to finance it or would you like to pay cash?" I said, "Oh no, I'll pay cash." They said, "Well, if you pay it over 2 years, it's the same as cash. You don't get charged any interest." I said, that can't be. That's not possible. He says, "No, it is." I said, "Well, I've never done this before, but I'm going to sign up for the 2-year, payout, only because I wanted to see what would happen." Well, we signed up for the 2-year payout. I get a letter from a credit card company. I mean, like a MasterCard or something like that company, saying, here's here's the amount due. This is your payment a month. If you miss one payment, even by 1 day, your interest rate goes from 0 to 29.99%. 29.99%. And I thought to myself, how many people will make those payments every single month for 24 months, never be 1 day late? I said, never going to happen. I paid off the entire amount, and I got billed like $354. And we called them and said, "What's this? We paid off the entire amount." They could not find out what it was. I think it was interest or something, but they finally just wrote it off, But it is so dangerous out there. Even when the financing is free, you can go into servitude. It's incredible.
Well, and the thing with those, the way those are structured too, because we ran into this a few years ago, and what they would do is they would do things to try to induce you to actually make a late payment. And once you make that late payment and that rate goes from 0 to 29.99, not only do you owe on all the forward interest, you owe on all the interest behind too. So say your second to last payment is a day late, you owe 29.9% on all of it.
Right.
All the way back to when you bought the dog.
Yeah, that's why I don't understand how they can do that. I don't know how they can do that.
It's in the fine print. And what they were doing, like my wife and I ran into this, they would actually send us our bill, our monthly bill. They would send it closer and closer to the due date.
That's correct, right.
And I called them up and I said, "Look, I know what you're up to. You're being reported. You're being reported to the Attorney General." "Oh, well, it must be your post office." No. Here's the postmark. They keep getting closer and closer to the due date. "No, you're being reported. I'm paying this thing off right now." And that was the end of that.
Right.
And I did. I reported him. I reported him to the Attorney General here in Pennsylvania.
Good for you.
I'm sure nothing happened, but yeah, they try to trap you like that. And these car loans are the same. Here, check this out. The average car loan today is $27,000. In order to get the monthly payments down to a level where people can afford it, they're stretching the car loans out 6 or 7 years. The number of auto loans that exceed 72 months is now almost 1/3. It's about 30% right now of all loans are more than 72 months, 6 years. So you figure pretty soon we're going to have 10-year car loans. That car is not going to last 10 years.
Yeah,
First of all, people are going to get tired of it in 3 years.
That's right. Well, they, from what I understand, people flip cars every 3 years, and what people who have these 6, 7, 8 year car loans, when they trade in their car for the new model, they are actually underwater, like we're underwater with your house. They're underwater, so they have to pay out the deficit on their old loan before they can get a new free loan, if you will, buying a new car. And they get deeper and deeper and deeper in debt. And of course, the better, the more attractive the interest rate, the terms are, the higher the cost of the car. I mean, you can't get a car for a decent price today only because they have to pay for all of this free financing and paying out after 7 years and stuff like that.
Oh, but you know what? I mean, the Bank of America, they're very helpful. That what they'll do is when you owe that big lump, that balloon amount to get you out from being underwater on that old car, they'll just roll that into the new loan for you.
Yes,
You don't have to worry about it.
soon you'll be driving around in a 2-door Chevy with a $23,000 car loan.
Yeah, we'll just throw that into the new loan for you, and you don't have to worry about that. You just keep making that $500 a month payment forever.
Yeah, that's right. It's forever, and that's the problem.
Yeah.
I think that's the problem. I think you hit the nail on the head, is that all of these loans are forever. They never go away. I know people. In fact, there's a person sitting here in my studio right now can attest to that. Right, Preston? They never go away.
I can. Oh, I've got a great credit card story. Over the weekend, I get a letter in the mail. I mean, in December, I lost my job. All right, so now I'm working 2 jobs, but make like 1/3 of the money that I made.
I overpay you, Preston.
Yeah. I got my paycheck today, as a matter of fact. But so anyway, so I get in, so I haven't had a job since December, like a higher paying job that I'm used to, and I have a few credit cards. I've had these credit cards for over 5 years. When I was making good money, I would twice I asked for a credit limit increase. I had to ask them; they didn't offer it to me, but I started making more money, and I thought I deserved it, so they gave it to me. Well, since December, my income has dropped dramatically, but I've just been making a little bit over the minimum payments. I haven't used them since December on none of my credit cards. Well, since December, all 3 of my major credit cards that I have increased my limit because I'm not using it and I'm just making the payments. And they've actually increased my limit. They didn't ask me if my income had gone up. They didn't ask me if my income had gone down. But all 3 of my credit cards in the last 3 months have sent me credit limit increases. And I'm making less money, and I don't even use them. So they just want you to get into more debt. They don't want you to make the minimum payment every month. They want you to keep using it and make the minimum payment. So I don't understand that at all.
Well, they want you to make that minimum payment forever.
Yeah, and they want it to be higher and higher and higher, I guess.
Exactly.
Right?
Yeah, they want they want me to spend more and more money.
I guess the reason for that is that they say, well, this guy actually pays his bill. Let's give him a higher limit. He'll buy more, owe us more. We can collect more interest. I mean, I guess that's the logic. Am I correct?
Yeah.
Yeah, exactly. The whole point is to get you into trouble. That's what the whole goal and objective is. And like that's happened to us on a couple of occasions because we're deadbeats as far as the credit card company is concerned or that bank is concerned because we pay it off every month.
Yeah.
The only reason I even use the doggone thing is just because they give me the the rebate. You get the points or whatever, and then you can knock a portion of your bill off, for whatever the points are worth. But I don't pay interest. The whole whatever it is, we pay it off. If I don't have the money to buy it with cash, I don't use the credit card for it. It's that simple. So, and what I've noticed from time to time is, your limit starts here, and then this will go on for like a year, and you're paying it off. All of a sudden, the limit doubles. So I get on the phone and I call up. I say, no, put it back to that. Well, we can't do that. What do you mean you can't do that? You raised it, obviously, so you could raise it, so you can certainly cut it. All right, fine. You either cut it back to where it was or cancel it. Very simple. I'll go with somebody else, or I just won't use it at all. And it is unreal to hear these programmed droids that they have working at these call centers using all their little, cliche lines to try to talk you into, having a higher limit. Well, you can use our card to buy this. You can transfer balance from other cards. You can pay your mortgage with this card if you want to. Oh, yeah, that's great. Let's pay off a 5% mortgage with a 20% credit card. There's an idea. Wow. Hey, maybe I can pay off the national debt with a credit card, too. What do you think of that?
Well, Andy, here's the $64,000 question. Even that's outdated, isn't it? $64,000. Remember, there used to be a program, a person with $64,000. Now people have $64,000 on their credit cards.
Yeah, exactly. Or my student loan debt. Yeah, that's my student loan debt, right?
It needs to be the $64 million question now.
Well, I mean, where is this going? I mean, how far, how much can we extend this? If you project this out, I mean, we project the debt, the national debt, Medicare, Medicaid, Social Security, the military industrial complex debt, etc. But we don't do this to credit cards and to personal debt. Where is this leading us? I mean, with now they want to make community colleges free, if you will, if they want to try to entice people to go to community colleges if they can't go to college. In other words, they want to continue this indebtedness constantly. Where does this leave us? Where do we go? Where does this lead us to?
Well, for the common person, basically, I've called it neo-feudalism. I mean, that's really where we're going, where you're going to have, your few that have their seat at the table, the lowercase L lords and vassals and serfs and slaves. Basically, you're going to have that kind of a system, where you have, this oligarchy, if you will, that's at the top, and they're going to have all these people that are basically, you have to understand what this whole thing is. Forget about the dollars. It's not the dollars or the euros that matter. What it comes down to is when you're a debt slave, it means that you are pledging more and more of your time, labor, and output to these individuals. Forget about the currency. The currency is irrelevant. It could be gold for all it matters. Even if we used gold as a currency and silver as a currency, and we had real money again, if you're a debt slave, you are working to get your silver to pay off that vassal, pay off that lord, or pay off that oligarch. That's what you're doing. So when you're taking out your car loan, at 20%, I know I work with a fella has had to have this truck, right? Everybody's got to have a truck. And it had to be a new one, of course. Couldn't be a used one because that's just not cool. So it's like a $42,000 truck, paying 20% interest on this car loan forever. I don't even know how long it is, but it's got to be because the payments and all that, the time it's got to be close to 8 or 9 years. He's pledging almost 40% of his working time, his labor, to that finance company. That's what it's about. That's what it's you working for them. How different is it than being a slave? And saying, you're going to work for us and we're going to give you a house. Oh, wait. We'll give you a house and we'll give you this way to get around and we'll give you food and all this stuff, and you're just going to work for us all the time. How is this any different? Because and I firmly believe that at some point, and it may not be too far off, you're going to see debtors' prisons start popping up again. Where people who won't pay their bills or can't for whatever reason, they're going to end up in some kind of a situation where they have to produce.
Well, people will want to go to debtor's prison because then their food and their housing will be free, and they get free medical care. I mean, in fact, you'll have people signing up for it. People will be not paying their bills so they can go to debtor's prison. All right. With that ridiculous comment, which may not be so ridiculous, Andy, we'd like to just take a second to take a break and give our sponsors an opportunity to talk to our audience. Okay, would you please hold on while we do this?
Sure thing.
Okay, thank you.
You're listening to Liberty Talk Radio. Political talk derived from a historical perspective, not always palatable, but good food for thought. Pure libertarian talk with host Joe Cristiano. LibertyTalkRadio.com.
Express Test is your go-to company for on-site occupational health testing services. That's right, we said on-site. That means we will meet you at your facility for a free health and occupational safety consultation. Express Test specializes in hearing conservation, respiratory protection, and employee safety. We can help you establish viable programs tailored to your business and employee needs. For your free consultation, call 918-743-2929 or visit us at expresstest.com. That's 918-743-2929 or expresstest.com. Do you find yourself asking, what did you say? Aaron Cristiano of Ranch Acres Audiology has over 25 years of experience helping patients just like you.
Hearing requires conservation. We need to be aware and we need to be responsible for our own hearing health.
Understand more with a little help from Branch Acres Audiology. Call 918-749-7711. That's 918-749-7711 to learn more.
We'd like to thank attorney Constance Squires for her support of Liberty Talk Radio. If you want a comprehensive way to affordably avoid legal issues, call Constance Squires. For a free consultation, call 918-254-9283 or go online at isthyWillDone.com.
Steve Harden of the Harden Insurance Agency has over 30 years of experience designing family insurance protection, including retirement planning. Call 918-488-0024 or go to hardenagency.com and request a free in-depth estate and retirement evaluation. We look forward to earning your trust and helping you meet your life goals.
This isn't your typical talk radio show. This is Liberty Talk Radio.
Folks, this is Liberty Talk Radio. Your host, Joe Cristiano's here. With us, we have Andy Sutton, economist from the Commonwealth of Pennsylvania. Andy now devotes much of his time to exposing the corruption within our financial system so we can better plan for ourselves and not get sucked into this fake economy. I guess the matrix. And Andy, the other day I was thinking about how our mentality has changed, and how we make assumptions about what is going on that is not real at all. And what came to mind was the movie Matrix, where people live in the Matrix. Is this not the Matrix, or am I just being too way out there?
Well, it is. It is a matrix, and here's another thing that was looking at, and this is kind of technical here, but I think I could sum this up pretty nicely. Basically, this last GDP report that we saw, and the focus of the article is on the market, but to kind of distill it down, the last GDP report basically showed that the last 4 years of economic growth had been grossly overstated by almost 12%. So take that all that great economic growth that we had in the last 4 years and yank 12% out of it, which is a huge chunk. And the market kind of just went like this.
But that's negative territory, isn't it? That puts us in negative territory.
It's pretty close. So this is the matrix, because when people turn on the evening news, if you watch, whatever the guy's name is that replaced Rather there on CBS, I don't watch these programs, but every so often. But when you turn those on and they get to the business section, usually it's at the end of a segment, and they show you what? The Dow, the S&P 500, the NASDAQ. Right. That's what they show you. A green arrow or a red arrow. Right. And they might make a mention of, first-time jobless claims reached a record low, and people are like, oh, that must mean the economy's great. I see all these green arrows and jobless claims. It is a matrix,
right?
And because there's a wealth of evidence that points to the fact that employers always miss downturns. When employers are going into hiring mode, they're usually hiring at the top. Right. And you can go back decades, and employers will miss, the cycle almost always. In this market, they have come out and admitted that the market is nothing more than a rigged sham.
Right.
They admit it. They don't even try to hide it. And you try and talk to the average person about something like this. Oh, you're one of those tinfoil hat wearing guys, one of those conspiracy nuts, one of those types. No, I'm not. They admitted it right in the mainstream news that this is rigged. These 5 banks got busted for manipulating the LIBOR, which is the base interest rate for essentially the world outside the Fed funds rate. For Europe at a minimum, they got busted for rigging this, got charged a penny ante fine, and were told, hey, go right back to doing what you were doing before. This is right out in the open, and they don't try to even hide it anymore. And people sit there and, Oh, the Dow is up today. Oh, things are great. Hey, get the credit card out and go spend. It is psychological warfare, what is being perpetrated right now. And, oh, that's extreme. Yeah, it is extreme. But that's exactly what it is. All of this stuff, when you sit there and you scratch away, you've often said, people are a mile wide and an inch deep. Well, so is all this. Because when you scratch off that little inch of veneer, it starts to stink.
Right.
Like something you'd find out in a cow pasture. It starts to smell really bad. And that's how it is with all of these statistics and reports. You start scratching off that little veneer that they give you on the news, and it becomes blatantly obvious that the whole thing stinks. So basically, yeah, we're a country that's in debt up to our eyeballs at every level. Yeah, there's jobs. You can get jobs. They don't pay very much, but you can get jobs. And, you're going to end up spending the rest of your life working to pay off people you've never met, never seen, never even heard of. And we're living in this everything is great matrix. It's a perfect analogy.
Well, I understand that the first quarter GDP was revised to positive territory from negative territory. But also, one thing that it did not mention is that they doubled down on the winter adjustment in what do they call it, when they adjust for the winter months in the GDP
multiplier.
The multiplier, they doubled down on that, and that's the only reason why it got adjusted, is because what they did is they said, well, it was a particularly cold winter, like we never had a cold winter before, so they doubled it, and that put into positive territory. And then everyone's saying, well, geez, see, the things are getting better. The GDP is now all positive. Well, no, they just changed the number. Am I correct, or am I assuming that?
Yeah, what they basically said is, well, all right, since it was cold last winter. I mean, it's never cold. And people, when it's cold, Joe, didn't you know this? People don't buy anything at all. It's not that they go out and buy warmer clothes, jackets, heaters, extra, fuel oil, extra coal, natural gas, whatever. They don't do any of that. They just don't buy anything. So what we're going to do is we're going to say, all right, well, this is our winter adjustment factor. This is what we use to seasonally adjust for winter. But since it was so cold, what we're going to do is we're going to say, well, if it hadn't been so cold, this is what people would have spent, and we're just going to assume that they spent it.
Right.
That's basically what they did. So we don't like this negative number. See, this doesn't keep people. This is like that hole out of the matrix. We give too many holes, people might start actually getting outside that thing and looking at it, seeing it for what a sham it is. So what we're going to do is we're going to make that a pleasing number, and we're going to show a positive instead of a negative.
Yeah.
And never mind that a couple of years ago they added a whole bunch of stuff to GDP. Like when you flip a house, that real estate commission from flipping that house, that counts in GDP now. There was I wrote an article on it. It was a couple of years ago. There was a whole bunch of stuff that they just added to GDP, and there was one item in there that I thought was kind of straight up, and that was R&D expenditures.
That's right. Yeah.
That kind of makes sense. I mean, because you're depending on how you do it, obviously. If you're spending money to do research and development for a product that's going to be sold into the marketplace, all right, I can kind of see that. But some of the other stuff was just ludicrous. But what they're doing is, when the numbers stop working for them, they just change them. They change the metrics. It's like when the unemployment, that whole situation rolled over back in 1993. Well, we have to do something because we know the workforce is shrinking, and these people are not stupid. They knew this was going to be a trend. It was not a one-off event. So what we'll do is we change the methodology. And now you have a situation where all these people that are out of the workforce, all these people that collected their maximum months of unemployment, they don't assume that they're still unemployed. They say, well, they got a job. So they collected their 104 weeks or whatever it is now, and they got a job after that when they fall off the back end. They didn't get a job. They fell off the back end.
Right.
Now they're taking out 30% loans to buy groceries, through Bank of America, or Chase or whoever it happens to be. it's ridiculous what they do with these statistics. And when you sit there and you point that out to people, you get kind of like this. They're looking at you, and all of a sudden they're like this.
Well, it was interesting. They said it was a particularly cold winter. Well, it was not a particularly cold winter. If you go back years, we've had some real doozy winters, and yet the GDP wasn't adjusted. And then they said, well, one reason why the GDP wasn't as high as they anticipated it to be is because they thought it was particularly warm spring, and that prevented people from shopping. Well, now we have to be like Goldilocks, not too hot, not too cold. It's got to be the perfect temperature for the GDP to be constant. Now that's insane. Now what's really interesting is that today people don't have to go out and walk a mile to town to buy something, on a dirt road. They get in their car, which is usually garaged, and they drive to a mall and walk around a very comfortable mall that has a food court, and they can do all the shopping they want. And if they don't want to do that, they get on their computer and they buy online. So whether or not it's 0 degrees out or 10 degrees or 50 degrees out, that's all immaterial. But that should have been taken in consideration. In fact, it should have lowered the GDP and not increased the GDP. It's like, it's not too cold, it's not too hot, it's got to be just right, and it can't be.
Yeah, I mean, that's a good point to make. I mean, we've had much more severe weather conditions, whether it's heat in the summer, cold in the winter. Right. We've never made gross adjustments to GDP based on weather events. Hey, it's cloudy right here today. Are they going to adjust for that too? Because maybe somebody will stay at home. But you're right, people love to shop from home. What's better, what's more conducive to spending money online with credit cards at home than freezing cold temperatures? They should have actually discounted.
That's right.
And said that people spent more.
Yeah.
Because they didn't freeze in their houses, at least some of them didn't. We certainly had that problem here, though. There was a lot of people that didn't have the money to pay for food, medicine, and heat. They had to give up one of the others. Yeah, I mean, it's just ridiculous. But here's the thing, and this is where they get caught in their own trap. If you have two consecutive quarters of negative economic growth, that's called a recession.
Yeah,
that's a recession. So you can't risk that now. So I mean, I think it was last year, and we had it was like quarter one of last year, 2014, maybe it was 13, one of them, where we had a substantially negative quarter, and I wrote a sarcastic article at the time and said, you watch, not only will the second quarter be a blowout quarter, but they'll revise the first quarter up to positive territory, and that's exactly what happened. They will not risk saying what is evidently very apparent to people who really want to peel that first layer off of this whole thing, is we've never left. We've never gotten out of that 2007, 2008 recession.
Right.
We're still in it.
All right.
I
have a prediction to make. Our GDP will be lower than anticipated in December because it wasn't cold enough.
Yeah, there you go. Yeah.
People, it didn't put people in the Christmas mood,
mood.
So
Right.
sales were not. Yeah, sales were down because it didn't snow enough. The weather was too mild, thus the GDP was down. So we're going to triple adjust that to make it positive again. All right. Well, I want you to mark my words on that one. I'll bet they say something like that.
it's always the weather's fault.
Yeah. Now
that seems.
Yeah. What's happening? I'm a commodities investor, and obviously I've been choked to death and thrown in the fire. Can you give me some comments on the dollar keeps on getting stronger because it's the healthiest patient at hospice right now, and that's the way I look at it, and because of that, precious metals, which is a form of money, is down. I think we even had Rick Rule on the program a couple of times, and we've discussed this. What's your take on where do you think our currencies going versus real currency, gold and silver going? I mean, you have any feel for that?
Well, first of all, that whole dollar index thing, you can just take that and throw it in the trash because, like you just put it very perfectly, it's the healthiest patient in the hospice wing right now. Most of that index is the dollar versus the euro. It's 57% of the index is that dollar-euro pairing. And obviously with what's been going on with the situation with Greece and the whole European zone in general, the people in Germany seriously need to, I'm not even going to say it because some people will show up at the door here, but they need to get rid of those leaders that they have, like Angela Merkel and some of these other clowns, because what they're trying to do is they're piggybacking that entire trading block on the back of the German worker. Yeah. The Germans are the only ones that are doing anything productive. The rest of them are, demonstrating and collecting socialized, programs, food, medicine, whatever. And of course, as soon as you mention the A word, austerity, they start to have a fit, and because that's, by the way, that's going to happen here, the whole austerity thing, because that's the inevitable track. Is you get these people so far in that they can't get themselves out, and then you clamp down on them. And you say, all those freebies and the basically the party's over. Now you're going to start working to pay us off, and that's where the debt slavery comes into the whole thing. So the dollar index is out. That's majority of that is the euro, and obviously the euro's in the toilet. So that's represented the strength in the index. The dollar. You look at the dollar in terms of groceries. The dollar is losing value. You look at the dollar in terms of healthcare. The dollar is losing value. You look at the dollar in terms of college education. The dollar is losing value. That's the way you have to look at things. Obviously the gold and silver are the two whipping boys, if you will, just because there are some people out there, many people really, who understand that that's real money. So we have to beat that down. We have to make the junk look better. We have to shuffle some of that shine of gold and silver onto this paper junk that they peddle, because that's how they play their games. If they had to play their games using gold and silver, they couldn't do it. And they know that. And so do a whole bunch of us. So, but if you want to keep that matrix intact, like you were saying before, you got to keep those things under control. And that's what they do. Like there was a period of time, it was 2013, I believe, JP Morgan actually at one point in time had an entire year's worth of mine supply in silver shorted at once. That's just unfathomable.
Right.
Totally off the wall that they would do that. They're going to get burned, and my bet would be that they get burned in silver first, just because silver actually gets consumed in a lot of the processes. I mean, the coins that they mint and so forth, they don't necessarily get destroyed, but silver is used in so many processes. Right. Like these big screen TVs that everybody likes to buy. They'll have like an ounce, 2-3 worth of silver in them. What do they do when they go bad? They throw them in a landfill. Yeah. So, that silver gets used up. It's a huge thing now in healthcare with wound control and all that stuff as an antimicrobial. Right. They use it in healthcare. You don't get that back. Right. That's absorbed into the body. It's gone. Right. So my guess would be if they're going to get burned, they'll probably get burned with silver first, because it's getting used up, and there's a dwindling amount of mine supply available unless somebody hits a big one somewhere. It's going to be one of those things where it's going to become scarce. Obviously, I'm as frustrated as you are with the dollar price of these things, but when you start thinking outside the terms of the dollar, you look at a silver dollar. You used to take 2 of those to fill up a gas tank. Right. 2 of those still comes pretty close to filling up the gas tank.
That's right. Yeah.
And that's how really honestly that's how you have to look at it. in 1964, $2, two silver dollars would fill the car with gas. Today, not quite, but it still comes pretty close. So, don't remember it for what it is. It's not an investment in rising dollars. What you're doing is you're actually purchasing future money, because we will go back to those things again when this paper charade finally runs its course. And it might be something totally weird, like you're trading with your neighbor and you're using old silver dimes and quarters. I don't know how this is going to play out.
Yeah.
It might not be that you go to a dealer and sell it for whatever the currency of the day is. It might be one of those barter type deals where you're trading with co-ops and neighbors and things like that. However this whole thing plays out, but you're not going to go wrong going real.
Well, maybe our new currency will be the nickel, because the nickel still has 25% nickel, which is about 2.5 times more expensive than copper, and 75% copper, which is the exact same content and weight, 5 grams, as it was in 1866 when it was first introduced as the shield. The first nickel was the shield, and then I think became the Indian head nickel and whatever, but the buffalo nickel, but it's still the same. It's still the same currency as it was in this 1866. So I know people who collect nickels. They say there's no downside to it. The value of the metals is equivalent to about 5 cents, but that's just the spot price of the metal. But then to produce it costs another 2 or 3 cents. So when you have a nickel, you have something that actually costs 7 cents. So they say you actually make money by holding on to your nickels.
Oh, yeah, absolutely. Yeah, the nickel is one thing that's not changed, and the silver American Eagle is still stamped with a value of $1, because the Coinage Act of 1792 says that a constitutional legal dollar is a silver coin that weighs 371 1/4 grains of silver.
Yeah.
So those things are still standards, and you can't go wrong holding those, because, like I said, there's been oodles of these paper currency shams that we've gone through. Zimbabwe is at the end of their sham right now with these $100 trillion notes. Your friend Jim there, he sent me a $10 trillion note from Zimbabwe. I was showing that to people. They said, you're rich. You're rich. I'm like, I'm rich. He said, well, this is $10 trillion. Is that fake? No, it's not fake. It's real. It's bona fide real. Yeah, the friend of mine bought some precious metals with it. He got it for nothing. They looked at me and they're like, huh? That says $10 trillion. I said, yeah, this is worth about a pack of chewing gum in that country. Yeah. This is what happens to paper money, all paper money, eventually, is it gets to this extreme type of a situation. And all these games, and that's what people have to understand, is all these games that they play with the dollar and these reports and all this stuff, all they're trying to do is just keep pushing the sun up one more day on the inevitable. That's all they're trying to do. They want to buy a month. They want to buy 3 months. They want to buy 6 months. They want to buy a year. They all know. Everybody knows. Yeah. It's just a matter of...
Yeah. What is your take on the downturn of commodities? For example, companies have programs. They have the silver level, the gold level, and the platinum level. Of course, the platinum level being the most exotic and the most expensive one. But yet, platinum is less than gold, which I think this is the first time I've never known platinum to be going less than gold. But because platinum is partially has commercial applications more so than gold, they say that's why the price of platinum has gone down. Well, it's a very rare metal, and it's a fabulous metal. I mean, it's a very heavy in weight and its density, and much more rare than gold. But yet it's only going for like $960 or $80 an ounce or something like that today. But all commodities are down. And since all commodities are down, does that indicate that there is a worldwide recession going on, that people don't have money to buy things, and natural resource countries are really having difficulty? People aren't buying, and then people aren't, mining and whatever and producing.
This is the one thing that flies totally in the face of what you're hearing on the news. You hear in the news, hey, the economy's doing great and all this other stuff. If people were buying all this stuff and aggregate demand was way up, these commodity prices would be a lot higher. Yeah, you know what? It makes sense for the bank side to use their power and their leverage to knock these prices down because it keeps consumer prices somewhat in check. Yeah. And that's the whole reason why they do this. They do this to say that there's no inflation. I'll give you an example. Container freight rates from Asia to Europe crashed 23% in 1 week. And you look at the Baltic Dry Index here, peaked back in 2008, it's tanked. All of these broad aggregate type indicators are screaming worldwide recession. Right. Aggregate demand is screaming worldwide recession. The only place you hear that everything is fine is on CNBS and these other television media outlets. Right. There's definitely conflicting stories here. What you're observing in some of these other metrics and what you can see as opposed to what you're hearing. We have whatever boom, and I say that very loosely, whatever boom we have in America is credit driven.
Yeah.
And it's so obvious now. It's not. I mean, it's beyond obvious. It's painfully obvious. Yeah. And the same thing is going on. Europe is tanking.
Right.
Absolutely tanking.
Yeah. Well, Southern Europe apparently Southern Europe is in depression, and Northern Europe is not as bad. So it averages out to be a recession. We have calls on line 1 and line 2. You want to take line 1 first? Okay. All right. Line 1, you're on the air. Your question, please. Hello? Hello? Line 1, you're on the air.
Are you saying that collecting nickels would be something that could be useful or provide security in a crisis?
Well,
sure.
You want to answer that? Or I'll answer it. Take it away, Andy. I'll let you answer that one.
Look at it this way. Nickels are homogeneous. One nickel's as good as another. They don't spoil. They're tangible. They have intrinsic value because there's actually metal in them, and the metal is useful for other processes. Yeah, anything like that. There's people that save pennies, pre-1983, I believe, 82, 83 pennies because they're 95% copper. Anything that has intrinsic value is going to be worth something in a crisis type of situation. A friend of mine calls nickels the poor man's silver.
That's right.
And it's easy to save them. You get them in your pocket every time you go and pay cash for something, and you just put them aside. And it's a viable strategy.
Yep. Actually, caller, you're the nickel is like they say, like Andy said, poor man's silver. Think back in 1964. When we still had 90% silver quarters and dimes. If back then I said save all of your coins, if you get a quarter or a dime, save it, don't give it away. You'd probably look at me and say, what for? Are you saying it's really worth something? And then in 1965 and forward, we say, well, geez, if I only would have saved those 1964 and prior quarters and dimes and even half dollars, boy, I'd be worth a fortune today. Well, there's no difference between the silver and the quarter and the nickel, other than the nickel, the value of the metal is worth less than silver, but it still has intrinsic value. Now, they replaced the penny, which was 95% copper. That was prior to 1963. Some 1982 pennies are 90% zinc, but most are 95% copper. You can weigh them to tell the difference, by the way. And before, now they were part of the system whereby, if you ever notice, a nickel is much larger than a dime. Well, why would a nickel be much larger than a dime? Shouldn't it be smaller than a dime? Well, not. That was because the metal in the nickel was worth less than the silver was worth in the dime, so the dime was much smaller. We did away with that for the dime and the quarter, so the only one left is the nickel. Now they say, well, why do we still have a nickel made of of metals that have some intrinsic value. And the answer to that is that Congress is afraid if they devalue the nickel, it may sort of trigger an attack on the dollar. That it just may cause an event to occur. So the government spends somewhere around $51 million extra a year to make a nickel that they could make for $51 million less, but they're afraid to do so. So I say yes, save your nickels. Does that answer your question? Caller? Oh, line one is not on line one. Do we have line two now? Line two, you're on the air. Hello.
Good morning, Joe, Andy. This is Jim.
Oh, Jim, thank you for calling.
Hello, Joe.
We can hear you.
You're welcome. Andy, good morning. Jim here. How you doing, my friend?
How you doing, Jim?
Excellent. Hey, it's been good to listen to you over the years on Liberty Talk Radio, but it's even nicer to see you on Skype. I wanted to ask you. I don't follow geopolitical, global economic events as much as I did in years past. I just kind of got burnt out and frustrated on it, trying to just focus on my own world and things I can impact. But saying that, I've been reading headlines and had read articles a few months ago that this October, is it the IMF or some global monetary organization is going to reevaluate a basket of currencies. And they're talking about that the Chinese want their yuan to be included in it, and it may have some this rebalancing of this basket for, is it ADRs or whatever, that it may have a significant impact on the perception of the dollar as the world reserve currency, and perhaps will lower its value relative to other currencies. What do you know about this October event, and do you think it's going to be significant, or what impact might it have?
Well, I know that every October there's a bevy of rumors that are unleashed about the inevitable demise of everything from here to the horizon and beyond. As far as like the SDR and the basket that you mentioned, yeah, the Chinese do want they want their seat at the table with that. What's more important, I think, than even the IMF is what the Chinese, the Russians, and the Indians and Brazilians are also doing as well on the side, is the BRICS Bank. And I think that's going to be something to watch even more closely, just because that is going to be a direct competitor, if you will, with the IMF paper system. So you're going to have the New York-London cabal, and then you're going to have this BRICS Bank, which is going to basically work in what's called a gold-backed trade note, which basically means, it's going to go back to the old system where foreign debts were settled in gold, and if you don't have gold, you don't get to engage in foreign trade with these partners, and so forth and so on, which would put us at a distinct disadvantage, considering the massive amount of container ships that show up in Los Angeles from China. So, yeah, I mean, the IMF thing, that gets circulated every summer, because they do meet periodically, and they always meet in the fall. That's just one of the times they meet. But that's one of the things that usually get kicked around in the spring or summer. It always sounds so ominous. When the IMF meets in October, and they do this, then the whole thing's going to come unleashed. Now, let me say this. If they did do that, and they did throw the renminbi or the yuan or whatever they're going to call it into the whole basket for special drawing rights and that sort of thing, it would cause a serious impact negatively on the dollar, and it would cause a reshuffling. Whether or not they're going to do it this fall, we won't know until the day after. It'll be like Cyprus, it'll be like Greece, where you'll go to sleep one night and you'll wake up the next morning and your bank account will be cut in half, and it'll have a new sign next to it instead of a dollar. So you will not be given advanced fair warning and time to prepare, because that's the model that's been laid out already. They always happen over a weekend. People race to the ATMs, and by the time Monday morning comes around, there's a week-long holiday, and by the time that's over, your world's changed. So that's the model that they're laying out. So if you happen to think this is going to be the year, then now's the time to make your adjustments for that. And frankly, I would make the adjustments regardless, because at some point, these things are going to take place. How exactly they take place, when exactly they take place is not as important as the fact that they are going to.
Gotcha. Appreciate your perspective. And then lastly, and I'll take your answer off the air, is we hear every now and then about a movement to press our government to audit the gold held at Fort Knox, and there's people that are suspicious whether it's really there or not. Texas wants to take their gold back and create their own depository. Any comments about that would be appreciated, and I'll let you go and listen to the rest of the program. Thanks a lot.
Thank you, Jim.
Yeah, as far as the audit goes, I mean, it's the same kind of thing when Ron Paul started his movement to audit the Fed. There's a lot of skeletons in those closets, and I have a feeling if you audited the Fed, you'd probably find out what happened to the gold in Fort Knox, if in fact it's still there, who owns it, how many different parties it's been simultaneously leased to, and all those other dirty little things. What I would be fairly confident in saying, Jim, it doesn't belong to the American people. It's certainly not our gold. And if it does belong to an entity in the United States, it isn't any entity that represents the people. It's an entity that represents an outside interest. I've not been in there, so I have no idea whether it's there or not, but I'm fairly confident of saying that it doesn't belong to the American people.
Well, there was a program on the History Channel. I'm struggling for the title of the program, but they do investigative reporting. They take, they have independent. The three people go out in the field and they independent reporting, and they did it on Fort Knox. And they actually went to Fort Knox, Kentucky, and what they did is they went to restaurants. They went to people who worked at Fort Knox, people who had families who worked in Fort Knox, and they asked, they had, do you think there's any gold there? And to a fault, everyone said, no, there's no gold in Fort Knox. Everyone knows that, and they said that with such surety, like, well, of course not. There's no gold there. And they said, well, how do you know? They say, well, my mother used to work there and she used to keep the books in here. And they said it's all assigned out, or whatever the case may be. And it was a very matter of fact thing, like, no, there's no gold in Fort Knox, and whatever gold there is there, it doesn't belong to us anyway. So, and it was right across the board. There was the closest thing they got to whether or not there was gold in Fort Knox was when people said, we're not really sure, we don't know. Even people who were the guards that used to open the gate with the gate and whatever the vault door and whatnot, they said the same thing. And they said that the whole vault is actually, they said you get claustrophobia. It's a very small vault because, gold is very expensive, doesn't take up much room. And they said that there basically is no gold there. And that's the reason maybe that Germany is getting their gold back in bits and pieces and not in one lump sum.
Yeah, that was a big thing, because the Fed, they asked the Fed for their gold back, and the Fed said, well, we'll give it to you over a period of 7 years, which basically means that the Feds, they had to go and find gold to give back to the Germans because they don't have it.
And they defaulted the first year. They only gave them a small portion of the first year's amount too, which, I mean, they defaulted on the default.
This is analogous to that whole, if everybody's in debt, who's the money really owed to?
Right.
This is kind of the same thing. If the Fed doesn't have it, who has it? The gold didn't disappear.
Right.
All right. It didn't vaporize into nothing. Somebody has it. And I'd be willing to bet that the same somebodies that have all the gold are the same ones that the world owes all this fiat money to.
Yeah. Yeah. Well, Andy,
I'd bet my left arm on that.
We are coming to the witching hour. I'd like to give you the last minute or two to make some closing comments and tell our audience how they may access your blog and your newsletters.
Well, I'll start this off. Economics 101. Walmart hikes minimum wages, prepares to fire 1,000 people. So yeah, that's kind of how that whole minimum wage increase forced upon the marketplace works. They cut jobs. But anyway, thanks for having me on here. If people want to follow what's going on, I write sporadically now. I did a bunch of articles about 2 or 3 weeks ago, and I'm due for another spurt here. They can go to sutton-associates.net. That site is still available. All the articles are linked there. Everything that's ever been put out is linked there. There's a new mailing system, emailing system. If you were listed under my 2 cents and you didn't get anything for like the last month, go to the website and sign up again, because I got forced out of my old software onto a new platform, and I tried to get everybody copied over before they decommissioned the old platform on like 1 day's notice. I think I got everybody, but if you haven't been getting anything, please go to the website, www.sutton-associates.net, and just sign up again. And if you're already in there, it won't matter. It's not going to screw anything up. So if you're not sure, just go and sign up again, and that way you'll be sure to get the newsletters when they come out. And I actually like this new system a lot better. I just wished I would have had more notice. But that's the best way to get in touch with me. If you want to ask a generalized or more specific question about any of these issues, there's a contact form on the website that you can send an email to me through that.
All right, well, just a closing comment. Since you mentioned Walmart, the Walmart in our area has converted many of the checkout counters, a significant number of the checkout counters, in fact, to the automated checkouts where you check out yourself, on the scanners, and they have one person there who monitors like 12 stations or so, and in case they need some help. So I would suspect anywhere from 4 to 8 jobs somewhere in there were displaced right then and there in that one store. Anyway,
but they're raising their minimum wage at Walmart.
And that one person,
we're going to get rid of people. Yeah. We're going to get rid of these people.
Yeah. Well, that one person probably makes and deserves to make $15 an hour because they're monitoring all these stations and they have to be computer literate and whatever. So they've upgraded the job and it's worth $15 an hour for them. But a checkout person is not going to make that money. Anyway, Andy, thank you so much for being on our program. I understand that you're going to be back with us on the 3rd Thursday of this month. Is that true? Do I have that correct? Okay.
We'll do that. We'll do that at the same time as today. And why don't we just make it this time all the way forward? That way, there's no more confusion.
And that is that 7:30 or 8:30? 8 o'clock.
8:30 my time, 7:30 your time.
Okay, we'll do that. Andy, thank you.
That works for you guys. Let's just do that.
It works for us fine. Thank you so much for being on our program. Really appreciate it. Thank you so much.
All right. Take care. We'll see you soon.
All right. Bye-bye. Folks, this is the end of today's program. We'd like to thank our sponsors for the financial support, and we'd like to thank you for listening in. You can further the cause of liberty by recommending this program to your friends and let us hear from you. Our email address is comments@libertytalkradio.com. Remember, as my wife would say, you are either allowing your liberties to be taken away or you're striving to protect them. Unfortunately, there is no middle ground. Until next time, this is Joe Cristiano. You've been listening to Liberty Talk Radio. Stay well, stay tuned.